Good morning. My name is Jay Rosenthal. I'm the Managing Director of Business of Cannabis. Welcome back to Business of Cannabis for Tuesday, January 11th. If you like what you see, you can check out the rest of our channel and watch our full archives of Business of Cannabis. And because this is YouTube, I'm obliged to ask you to smash the subscribe button on our YouTube channel. For those new to Business of Cannabis, since 2017, we've highlighted the companies, brands, people, and trends driving the cannabis industry. And that's what we look to do here every day. First, we'll run down the key stories we're following, then go to a cannabis conversation in our BofC Live segment. Today's BofC Live conversations with Matt Karnes from GreenWave Advisors, sharing his thoughts on New York's legalization's impact on the sector overall. We recorded it in person in New York, so stick around for that. We'd love to hear from you in the comments, and always feel free to visit us at businessofcannabis.com, as well as through all of the social channels, including Twitter, LinkedIn, Facebook, and Instagram. For today's stories, we will look at the states that took a plunge into legalization last year, as well as ones to watch in the coming year. We have our weekly update from our partners at Cannabis Benchmarks. Tilray reported their quarterly earnings. They lost sales, but still gained profits. And the London Stock Exchange's first cultivator listing has been delayed. For our first story, the Cannabis State of the Union. As an increasing number of states implement their own flavor of cannabis reform, it can be tricky to keep track of all of the past year's action. So let's review with the help of Forbes. First, states that legalized adult use in 2021 include Connecticut, New Mexico, New Jersey, the big one, New York, and Virginia. And federal reform efforts. So the Safe Banking Act passed the House for the fifth time, but didn't make it through the Senate. But in the Senate Majority Leader Chuck Schumer, Senators Ron Wyden and Cory Booker introduced the Cannabis Administration and Opportunity Act, which is a mouthful, which emphasizes equity. Now, Republican Congresswoman on the other side of Congress, Nancy Mace, introduced the Business-Friendly States Reform Act. So things are moving, just never as fast as we would likely expect or like. And so far the tally stands at 18 states that allow that allow adult use. 36 have legalized medical cannabis, and legal states have hit $25 billion in sales. Now, ones to watch in the coming year. So there will be more, obviously, because the March is upon us. And the ones that are really important to watch for adult use are some very big states, but kind of look like a presidential political map. Pennsylvania, Ohio, Minnesota, those ones being sort of swing states. Maryland, New Hampshire, Rhode Island, Delaware, and Hawaii are on the cusp of adult use. And medical, some states you may not be expecting: Mississippi, South Carolina, North Carolina, and Kansas. Yes, Kansas is on the medical watch list for cannabis. Now for an update from our partners at Cannabis Benchmarks. Each week, our partners there take a look at a core subject and share their Canadian cannabis price index with our audience. You can see that at businessofcannabis.com. But today, they also took a look at the mix of cannabis products in Ontario right now and what is selling. This is between Cannabis 1.0, so that's flower and some cannabis oils and capsules, and Cannabis 2.0, commonly known as 2.0, which is edibles, concentrates, vapes, and the like. And with over 2 years of data, they are seeing that Cannabis 2.0 products make up a steady but relatively small portion of overall sales. Total cannabis sales in Ontario have been accelerating with the rapid build-out of brick-and-mortar stores. And since the full rollout, however, 2.0 product sales have averaged just about 23% of total legal Ontario cannabis sales. Many in the industry were hoping for 2.0 products to capture a larger share of sales dollars because they generally demand or command a premium in terms of price. Consequently, those stats are likely, according to Cannabis Benchmarks, disappointing to Canadian cultivators and processing businesses, which place big bets on the Cannabis 2.0 release. For our third story, Tilray posts Q2 profit despite sales dip. Its market share, Tilray's market share in Canada, slid from 17% to 10% since merging with Aphria, but Tilray managed to post a profit this past quarter, according to BNM Bloomberg. Some of the Q2 highlights: $155 million in revenues. Cannabis drinks wellness division reported a year-over-year increase, $13.8 million EBITDA. And $6 million repricing of its corporate bonds helped create a $6 million net profit. although sales fell by approximately 15%. And while prices have fallen by 22.6% industry-wide, Tilray hasn't discounted its products to the same extent, according to their CEO, Irwin Simon. Now, finally, the London Stock Exchange's first cultivator listing has been delayed. Greece's Hellenic Dynamics, which was planning to be the first cannabis cultivator to list on the London Stock Exchange last October, is now saying its IPO will launch later this month, according to Business Can. The reason? Well, rigorous requirements from the Financial Conduct Authority. Quote, it's taken a little bit longer with the opinions and everything, but so far the FCA seemed pleased with everything that we provided, and we are looking forward to listing, I think probably early January, said VP Devinder Rai in an update to investors. Those are the stories we're watching today. You can join 10,000 others and catch all these stories and more in your inbox every day at 7 a.m. Eastern with our Cannabis Daily newsletter. Coming up next on our BofC Live segment, we'll have a podcast with Matt Karnes from GreenWave Advisors. He's deep in the sector, advising investors and analyzing companies. We've connected with Matt before in advance of a cannabis expo he did last summer on the Hamptons. This is Matt Karnes, recorded live on December 9th in New York City. This is BofC Live with Matt Karnes. Matt, thanks for being here.
My pleasure.
Nice to see you face to face. We've done this once, but not recorded face to face. We recorded once via Zoom over the summer. New York is on the cusp.
It is. It is.
But
legally, I should say.
I was going to say, this is what I was going to say. It's on the cusp legally. There's a medical market here now, but I just walked by a store that said cannabis, New York's first recreational cannabis club. That
there
sounds
you have
shady.
it. Yeah, there's a lot of that. I mean, the day after they legalized, I saw a sign in my neighborhood, dispensary. I took a picture of it. I posted it. And there it's down. I hope, law enforcement, whoever saw it and, is now more aware of what's going on. But I think you're going to see that all over the place.
Yeah.
And, people who don't know any better, who haven't been following the industry, think, oh, it's legal. I read in the paper it's legal. So here you go.
Yeah. And then Albany is relatively slow.
Yes, for sure. We know that,
right.
For sure.
That predates cannabis by a lot.
Yes.
But it is slow on big decisions, and always has been, from what I've seen.
And more so during the Cuomo administration. Yeah. And then just to get medical marijuana on the books was a real battle. Yeah. And the evolution around that and how slow New York has been to ramp up. And they still really haven't ramped up.
Right, but it's also interesting. Like, you could be slow as a legislator, as a regulator, all those things, implementing the voters' will, whatever it is. Doesn't mean the industry, doesn't mean people aren't getting cannabis.
Correct.
Like, you could be as slow as you want. You could take 5 years. In that 5 years, there's going to be billions of dollars of cannabis bought and sold and consumed, just not under your thumb, necessarily, right?
Absolutely.
So it's like you can go slow and get it perfect to your mind as a regulator, but consumers don't care.
They don't care, and the slower you go, the longer it is till you realize the revenues.
Right.
So it's.
And the longer you realize that it's going to take you longer than you think it is to, however you think you're going to either stamp out the legacy market. Like, it takes time, right? You might as well start because it's going to take a long time.
Absolutely. And I would say one of the disadvantages for New York, notwithstanding the fact that it took a very long time even for Cuomo to come on board for many years. No way. But then, he saw other states implementing medical marijuana. The sky hasn't fallen. Then some states were implementing recreational, most notable California. Finally, it was back in 2016. I believe the first, medical licenses were awarded and the market was implemented. But if you think about it, how slow let me back up a second. At that point in time, the form factors were very limited.
Right.
Medical marijuana, capsule, no edibles, no flower, very, very restrictive. So who the hell, especially in New York City, right, is going to buy any of this stuff when anybody could get cannabis delivered probably quicker than a pizza these days.
We could probably do it while we're recording.
Oh, yeah.
Don't you think?
Probably.
Yeah,
We should.
Yeah, we should try. Well, it's already on order, so it should be up any moment.
Absolutely. And so, it was very interesting because when the existing license holders were looking for capital, people were thinking, well, gee, why would I invest? There's not going to be any activity. There's no way these businesses are going to compete with an illicit market. And that's very much the case. It's a call option. They are going to see their day in the sun when the rec market becomes, is implemented because they're grandfathered with a fully integrated license.
Right.
So that's the reason behind. So all of these investors are now gonna, now they're gonna be satisfied, hopefully.
Right.
But if you think about it, when I launched GreenWave Advisors in 2014, and I assessed each market, and I looked at medical marijuana in each market, really the addressable market is defined by how many people have each qualifying condition.
Right.
How many people have cancer, how many people have glaucoma. So it was a very, very daunting task, but that's what I did. Right. That's how I approached it. And so guess how many people, well, when I looked at the New York market, roughly, now there's about 20 million people in New York. Mm-hmm. About 1.8 would fall under my definition of an addressable market.
That's one of the indications.
Yes, so who has glaucoma, because there are statistics out there of how many people have these. And then I made a broad assumption around, how many chronic pain, the catch-all, right? So today, and now this market's been implemented for 5-6 years now, 150,000 patients. Right. Then the medical community, they made it very restrictive around the medical community. For, a doctor had to go take a course. Like, that's going to happen, right? So they
skeptical doctors taking a course.
So
entrepreneurial ones maybe, but not necessarily.
Exactly. So so now this market has really never flourished, and they never really had anything implemented really on a large scale to accommodate a rec market. So now what are they doing? Now, all of a sudden, flower is allowed. Now, all of a sudden, you don't need to pay for a medical card. Now, all of a sudden, all these things are starting to open. Oh, we'll now give our patients, allow our patients access to flower, whatever.
But not pre-rolls.
Yeah.
Right?
No edibles.
Right.
But that will probably change. So they're teeing up for the rec market, clearly. Now, the problem in the Northeast, well, more so in New York, is they're not really able to flick the switch like they did in, say, for example, Arizona.
Right.
Arizona had a very, robust medical market.
Like Michigan, too.
Yes, exactly. So when the time comes, just flick the switch, get your application.
This is going from 150,000 to several million people that want weed.
Yes, exactly. So New York is kind of stretched now. They're at a disadvantage because they weren't forward-thinking back in the day. Right. New Jersey, somewhat more forward-thinking when Chris Christie was the bottleneck. So when he left office and Murphy stepped in, the first thing he did, let's expand the medical program.
Right. They had indications in 2018.
Yeah. So
with the pen.
Exactly. So that's what happened. So now they're better positioned. I mean, there was a bottleneck in awarding the new licenses because of some legal issue, but they're better positioned now. And now when recreational comes online, there's going to be a huge undersupply because now you have all these people that want to smoke weed legally that can't, there's only a limited amount of product available. So now we have, some of the larger MSOs obviously are, tuned into that and are building out and so forth.
Yeah. Well, it's very interesting because as you stated, it's like state by state, of course, but even going back to the number of indications and the willingness of doctors really is an indicator of how successful the market be early on.
Exactly.
It's really interesting to sort of think about that. And you can think about it in Michigan, you can think about it in Arizona, you think about it in New Jersey and New York, you can think about it as a country of Canada. All those things factor into the early days success or failure, but also what is factored in is, and this, I'm interested in your thoughts, you end up, then people make major investments to ramp up production very quickly because it's unclear who else is ramping up for production. And then you have this oversupply, but it takes time, and that's just as devastating to these companies.
And there's still a lot of unknowns, like interstate commerce and how that's all going to play out. So do you build a big facility in New York, but New York may be able to accommodate New Jersey, and then then we're going to have this cooperative agreement among the tri-state area. Right. But then guess what? Then you have issues around lab testing and testing requirements, and is everybody on board? Is everybody in sync?
Right.
How is that going to then change when it's a national, footprint?
And why would you build it in New Jersey, for example, which is very expensive?
There's so many uncertainties. So this is why, hats off to the larger MSOs who are able to figure this out and balance and walk on that fine line. because there's a lot of decisions to have to be,
And there are hundreds of millions of dollars of decisions.
Yes, absolutely. And there's still some element of uncertainty.
Yes,
for sure.
Lots of it. And part of that is uncertainty because DC is dysfunctional, maybe. And like they can't make a decision on banking, they can't make a decision on anything.
They can't, and that's really, really, really just mind-boggling. I mean, just for no other reason. We already know, right? The smoke's out of the bong. Okay, pot is going to be federally illegal. We don't know the timing, the nature, extent, and timing, and all that, but it's going to happen. But meanwhile, because of banking and the restrictions around that, it's a public safety issue right now, and we're seeing this more and more.
Yeah.
People are getting held up, especially post-COVID.
Yes. Yeah.
Especially because cash is cash. People are more desperate, and so what's an easy target? Gee, let me look online here. This dispensary is open from 9 to 5, and it's over here.
And we hear the people coming and going.
Yes, and they probably surveillance around that. I'm sure. So it's really is very nonsensical. And recently there was big hope that the SAFE Act would be passed. It would be to be included in the defense spending bill, and that didn't happen.
Yeah.
So
no kidding.
Yes. So now,
can I ask you a question about that?
Uh-huh.
I think banking, of course, is an important. That's what they were talking about. But does the delay in DC just strengthen the position of these MSOs because they're operating and they're generating revenue and they're cementing their footprint in these states?
Absolutely.
And more?
Yeah. At some point though, the floodgate has to open, and they're well positioned. I mean, it's almost advantageous for a little bit more of a stall, but the banking issue, just for nothing else, just let people these operators put money in a friggin' bank account, a normal bank account.
Right.
That's all right now. That's I'd be happy about that.
So would they.
So yeah. Wow. Because if you think about it, there's such an added cost of prohibition. There's the extra taxes that are involved. There are these compliance costs, all these risks that have to be thought of and mitigated, and all kinds of other costs associated. So what's really remarkable about these larger MSOs is that they are able to achieve a free cash flow profile in light of all these added costs.
Right.
So and they're, obviously these stocks are trading at a discount to really any normal company, really in light of their growth rates.
And opportunity.
And opportunity. Part of that is the risk that's still embedded in the industry.
Right.
There are operational risks. Yes, there's operational risks because people are getting held up.
Right. Right, but that's
that's a piece of it.
Those are super important to think about and do, but those are also not micro issues, but not one-offs, but like point of sale basically, as opposed to sort of broad swaths. And so when you look ahead, because we're in New York, it's interesting to talk about New York, and it will become legal at some point. I mean, it's legal, but it's it will be an industry at some point, and what it'll look like. And how important do you think that is to the overall? So New York's influence. It's 20 million people. That's not none. That's a big market. But I think it is more important than just those 20 million people being served with cannabis. Culturally, business-wise, policy-wise, like regionally, like how are you looking at that and sort of assessing sort of the importance of that market, big picture?
It was two markets, right? First it was California. Yeah. That was a big thing on the West Coast. Yeah. And that kind of laid the groundwork for other states to legalize. And now we have New York. And clearly, as you say, it's a huge opportunity. It can't be ignored. And clearly, and this was very, very predictable. I mean, this is not like, oh, gee, this is such a revelation. Right. When New Jersey passed rec, of course New York is going to do it. All you have to do is get on a PATH train and swing over there, which I think is going to, because I think New Jersey is going to ramp sooner than later, relative to New York, people are going to do that.
Be a good location to get right out the path.
Oh yeah, completely. It's not really that difficult. But New York is very important. Also, just besides Wall Street and the capital, right? Because now I have a Wall Street background. I worked on the sell side. I worked for a few of the brokerage houses, Bear Stearns, Cowen, and so forth. And and I'm my clientele are institutional investors. And when I started this, people really in 2014. they really kind of shied away from me, to be honest with you. And I'd like to
They're
think
like,
it was
"Nah,
because of the pot, not
We'll
because
talk
of
to you
me.
in 5 years. Yeah. Right?
I'd like to think it was because of that, not
Right.
for any other reason. So, this is where a lot of capital is. So now when people see New York and they see, not that a lot of people haven't traveled at this point to California or whatever, but there's still a handful that haven't really experienced what a dispensary is like, how professional it's gotten, the caliber, the nature, everything is just really top notch now, and it's probably going to get even better, obviously. Yeah. So to have the Wall Street crowd and the money center in New York see it, and not only that, on Madison Avenue too. Yeah. Now you have really advertisers and all that kind of stuff.
And thinking about even increasingly, I was just seeing pictures people were posting from California, and not that he's not great, but like Gary Payton, which is great, but there are more and more sports people getting involved post career, getting involved in cannabis. Art, Drake, like the arts, culture, sports, society people, like they are getting more involved, and I think it drives down some of that stigma. But I think nothing replaces the seeing it day to day on a street corner.
Absolutely.
And both seeing that it's not a big deal and seeing that it's amazing.
And the packaging and just the thought behind it. There's a lot of intellect behind it, rather than just buying a bag of weed, in a plastic bag. Yeah.
That was pretty good too. But yeah.
So I think that's all those factors and the job creation and everything else. I think that really will lead to a heightened level of interest. Not only in the Northeast, but certainly, hopefully, within Washington, they'll accelerate the process. Now, Chuck Schumer obviously has a political agenda, to put what he did, put everything into one bill. Just a lot of extra burden and a lot of things that probably weren't necessary. Now, to me, most notable, just because I'm a numbers guy, is the excise tax, which would go up to 25%. Now, if you think about that, 25%, in addition to all the other taxes, do you think the illicit market is going to go away?
This is exactly the thing that came up in a conversation earlier today that we're recording is you can have policy goals, great lofty policy goals, keep out of the hands of kids, heavily regulated, make sure the product is safe, and all those things. It's great. But if you and generate tax revenue. But if you do all those things and make them perfect as a regulator that you think is perfect, that's not necessarily how the market is going to react. People going to react. Like if it's 25% more expensive to buy from you, Matt, versus you, guy on the street, then, and I know the guy on the street, and I've been buying from him for 10 years.
And you know the product.
Right. It becomes, you need to I don't know what the right word is. Lose some as a regulator. You got to be able to not take all the wins, right? Because you have a policy goal of creating a market and driving out the legacy market. There has to be some balance in it.
Yeah, and you have to think bigger picture. Some of the things, yes, you want to put everything there, but let's take a step back and look at other compensating controls. Let's look at our compensating factors. For example, social equity, very, very important. Nancy Mace from South Carolina, the Republican who drafted a bill, very sensible piece of legislation. She's saying let's let the states kind of work on that. And I think that makes a lot of sense because look at New York, for example. 50% of the applicants, there's a mandate to award 50% of the applicants to minorities, people that were underserved by the war on drugs. There's that. There's also bigger picture, just on a national level, ESG investing, right? So social responsibility is a component of that. And so if you look at that as on a big picture, on a national footprint, that kind of takes care of that a little bit too.
Yeah.
So you have both of these issues being, both this issue being addressed in multiple areas. Yeah. So why does there have to be a bottleneck at the federal level for this?
Oh, Matt.
I know. Oh, gee. Why? Oh, gee.
No, but it is.
But it just doesn't make sense.
I also think there's this thought that we're going to do this and we do it right, we're going to do it, and then everybody will pull all these people from the legacy market into the legal market. It's fairly resistant, right? Initially, right? These businesses now that are operating unregulated in the legacy market have supply. They have supply chain, they have customers, they have a well-oiled machine, and every day it gets more well-oiled because they see what's coming, right? They are dialed in. The consumers it's a difficult thing to move and to But if you're not trying to address it, it's getting more entrenched.
It's
right.
Yep.
And that's the thing. And then the pathways for the people in legacy market to enter is partly what New York wants to do, but there's still big thorny questions to actually answer. Like, what are those people supposed to do with their money?
Hello. One problem with that. Then there's the whole issue of, the stocks and how they're traded and what exchanges they're listed on.
Right.
Access to capital. The cost of capital is obviously higher in this industry than any other industry because of all the, because of the restrictions around banking. And then, one other thing too, that I was thinking about is in terms of the Schumer bill versus the Mace bill. So they're looking at Mace is looking at a 3.5% or I think 3.75% excise tax. Compare that to 25%. I think what's more reasonable now. I also take a look back and look at the federal budget. Now that's totally out of hand.
Right.
It's trillions of dollars deficit.
Right.
But when you're in a deficit, like every dollar should help, right? So you want to replace the 280E tax. And so what I've done is I've gone through the exercise of looking at the publicly traded MSOs and looking at how much they paid in 280E tax as a percentage of the sales. It's obviously not a perfect exercise, but it gives me some indication. And there was consistency in the amount.
Okay.
And it's shaking out more like around 10%. So I think you really, you don't want to, I don't know necessarily if everything has to be in sync. Where, okay, tomorrow, no more 280E tax.
We're going to replace it with this.
Yes, but at some point, you would think whoever's looking at the budget at a national level, okay, we're going to lose 280E, let's replace it. But we can't be too crazy because then we're going to lose it to the illicit market.
Right.
So the balance, you hear it from GreenWave here, I would say maybe 10 to 15% is where it will shake out.
Okay. You before we came on, you were talking about your next couple of weeks. You're going to our cannabis conference in San Francisco.
Yes.
In January, you'll be in Palm Beach.
Palm Beach, yep.
Palm Beach, I want to say. As you're sort of doing this and talking to the industry sort of countrywide or nationwide, are you seeing, is there, I was reading into it, there is some consternation about what's happening in DC, certainly. Mm-hmm. But is there still this sort of hopeful feeling that we are on the trajectory to a rapid, when people are looking ahead, are they projecting 3, 5, 10 years to national scale of an industry, or is it just too difficult to tell?
Well, I think the industry is going to continue to morph, right? So the first stop on the bus, get the states in order. Yeah. Each state's going to legalize. Each state's going to do their thing. It's still fragmented. It's still every state operates in a closed economy. Now we have everything sort of okay. Well, now we're making progress at the federal level. When is that? Now, what is that going to look like? There are still risks, right? We don't know how the industry is technically going to be regulated, and I think that might be one of the rationale behind the delay in getting the party started, because I think the lawmakers really want to better understand the industry. What is the FDA going to do? What is behind everything? And so this gives them some time to kind of figure that all out. It was only since Biden took office that they really started to get their hands around this. They kind of knew, and I think it's really pretty much predetermined that it is going to be legal.
Right. It's just a matter of.
It's just a matter who's going to get credit for it. Who's going to get credit and when and all that. There's all politics. Yeah. So once that's all figured out and we have this legalized at a federal level, a look similar to alcohol in the sense that you don't just because it's legal federally doesn't mean you have to. It's going to be shoved down every state's throat. Look at Utah and look at alcohol. New Hampshire. Yeah. So that's how that's going to look at. But then the bigger question is what are these publicly traded companies going to look like, right? So every day, almost every week, there's more and more consolidation. just everything's getting eaten up, and now the bigger players are getting better, faster, stronger, whatever.
They're learning everything.
Yeah. So they're and they have capital and they're very strong and they have the influence. And so at one point, but at the same time, big alcohol, big pharma, the big guys, they've always been looking at this industry.
Right. But they have more money and more
and more. So, then the question becomes longer term, what happens? Say 10, 15 years, is a cannabis company part of a big alcohol company? Are these cannabis companies, are they standalone?
Right. Even this week we saw Tilray just loves buying breweries.
Yes.
Right? They bought another one in Denver And I think in the cannabis Twitter, I don't even mean the cannabis industry, but people on Twitter are like this. Alcohol and cannabis should be separate. But big companies own lots of different assets that are complementary. And I think we'll see it go both ways.
Yeah, absolutely. And then, then the other thing is, and this is one thing I talked about in 2014, is that how the industry will evolve. And there are different paths that these companies will go down. There's the rec path, there's health and wellness, so you'll see products at like CVS or wherever. And then really true grade medical marijuana, pure, that has precise dosage, precise efficacy. Yeah. It will be medical marijuana as it exists today will be recalibrated and redefined.
To be covered by insurance.
Exactly. And it's going to be more science involved. Like the notion, I mean, listen, I think medical marijuana serves a purpose. Yeah. It helps people. But, when my mother was very sick with cancer and lung cancer and she couldn't really breathe, I gave her shots of whiskey. It wasn't medical whiskey.
It was wellness whiskey.
It was wellness, right? So that's medical is just it's definitely needed, but I think it's just going to be redefined, recalibrated.
Well, Matt, it's always good to talk to you because you have great perspective and you both see the micro because you're in New York, but also you see a macro, which is really important because I think we often, like tonight, we're having an event in New York, talking about what's happening in New York, super important, super critical for all the reasons we talked about, but it is also the piece of a puzzle that is big and growing and complex and has federal implications, business implications, Wall Street, all those things are really compelling, and you're thinking about it from all those angles, which I like to talk about. So thank you for stopping by today. Nice to see you in person.
Likewise.
And we will connect with you down the road, maybe after you do your sort of countrywide road trip.
Yes, for sure. And I look forward to your event this evening.
Me too.
The Business of Cannabis.
Just makes me nervous, but gathering people, not because of COVID, but because there's lots of logistics, and those always happen.
I thought you thought
people
are crazy in New York. You don't want to be too crazy.
You know what helps with that? Cannabis, actually.
Absolutely. The cure for all.
It helps everything. Yeah. So thanks for stopping by, Matt.
All right, thanks. Have a good day.
You too.
Take care.
Thank you, Matt, for joining us in New York in December. That was episode 7 of Cannabis Daily. Thank you for joining us here and every day on YouTube. Please do subscribe, and we will see you tomorrow.